Good morning, colleagues. Good morning, property practitioner. We're going to start in a minute. I want to test the sound. Can you hear my voice? If you can, please give me a thumbs up. Okay. It looks like you can hear me. I already see the hands. We are not taking hands because we're only going to start. We'll take the hands after the webinar. And some of the colleagues, they will find us in the proceedings. We're going to start. The time is exactly 10 o'clock. Welcome so much today. Welcome, property practitioners. Welcome, principals, our stakeholders today on this webinar. Today is the 18th. Let me accept others. Please bear with me. I'm going to turn on my video. Can you see my screen, colleagues? I've shared the speakers so that you can see who's our speakers on our flyer. Please give me thumbs up if you can see the flyer. Thank you so much, colleagues. Thank you for coming to today's webinar, and we're going to discuss a very important topic on compliance with the PPA, and it's going to highlight on trust accounts and also a topic covering home loans products, that property practitioners yourself can benefit from. We're very thrilled today to have our two esteemed professionals from the ABSA with us today. And our first speaker today is going to be Ms. Tanya Marais. She is the head of legal secured lending ABSA product cluster. Ms. Marais is an admitted attorney and conveyancer. Currently, she's heading up the ABSA product solution secured lending in the legal team. She also provides legal support to the support home loans and vehicle asset finance business. Ms. Tanya Marais joined ABSA Bank in 2014 from private practice, where she was the conveyancing director at the time in the firm, and she worked in that firm for 18 years, colleagues. Tanya is also the ABSA representative on the ABSA Property Finance Committee and the ABSA representative on the Sectional Title Regulatory Body. And today she's going to cover, a few topics around trust account, as you've heard us mention on the email we sent. She will explain the three different types of the trust accounts. I'm sure you are also interested in that because as a property practitioner with a PPA under Section 54, you have to hold a trust account. So she is going to dive into different interests and also administering of a trust account. What does it mean? She will touch on Section 54.1 and also the closure of accounts. And she's joined by Ms. Portia Letlape. Ms. Portia Letlape, she is the head of product ABSA home loans. She specializes in business strategy aligned with customer needs and market trends. Beginning her career in retail, she rose to the role of business manager at Edcon, overseeing the Edgar's Chain Credit and Insurance portfolio. Notably, she played a crucial role in meeting contractual requirements for the 10 billion Edcon book sale for ABSA. At ABSA, Ms. Portia excelled as a customer value proposition manager, pioneering South Africa's first non-private black card proposition and influencing an industry shift. As a product portfolio manager in home loans at ABSA, she led groundbreaking initiatives, including South Africa's first green bond, which we call it the ABSA Eco Home Loan and ABSA Solar Finance Platform. So she's really passionate about going green. Currently now, what does she do? She is the head of product at ABSA Home Loans. Ms. Portia drives product development, manages integrated propositions, and oversees the digital strategy and ESG strategy. She further led ABSA Home Loans participation in the IFC MAGC for the amount of 4.5 billion fund. So this is another SA first in the market driving the adoption of green buildings, as we've seen, some of you who work with the developers. Ms. Letlape holds an impressive educational background, including a postgraduate diploma in business management. She also has MBA, insurance accreditation, and completed an executive development finance program in development finance. So you can see, colleagues, that the speakers we have today, they are experts in their field, and the information they're going to share with us, it's going to benefit us and empower us. We encourage you today to ask questions. We encourage you to engage with us and participate. So you can send us the questions on the chat or Q&A. And when you send a question, colleagues, can I ask that you put your email address next to the question so that I can be able to see the questions. And if we run out of time, I can still send those questions to Ms. Tanya Marais and Ms. Portia Letlape. So today, the presentations they're going to make, we're going to share them, colleagues, after the webinar. And the recorder as well, we're going to share it on our YouTube channel. You saw before we started, we shared the handles of our social media. So I want to welcome our first speaker. Before, let's not waste time. Let's get into the discussion, the presentation, and the information. I see the hands. We're going to take hands after the webinar. We're going to allow Ms. Marais to present. After her, we're going to allow Ms. Letlape to also present without interruptions. After that, we're going to give you access to ask your question, engage with them, comment, suggestion, and we're also going to look at the chats. I will be in the background. I'm going to monitor your chats. So today, let's start now. Ms. Marais, are you ready to take us through the compliance with the PPA? I gave you access to the video, access to the microphone. If we can begin, the floor is yours. Thank you so much, ma'am.
Good morning, colleagues, and thank you so much, Naledi, and to the Property Practitioners Regulatory Authority for having us here today. This is very special for us to be able to come and speak to you about matters that are critical to your businesses, but also to introduce the ABSA offerings to make your lives simpler and your businesses successful. So as you all know, the Property Practitioners Act is regulating a business that potentially introduces foreign concepts like trust accounts to colleagues. I think it's always important that we demystify the nature of a trust account. It is something that is easily managed, although it doesn't feel that way. So today I'm going to try and take away the anxiety around operating an account of this nature, so that you can actually get on with the business at hand, and that is selling your properties and supporting your environments where you work and your customers that purchase properties from you. As you all know, the trust account is an account where you hold funds on behalf of your clients. You are the holder of the account and you are accountable to all your clients for the funds that you hold in that account. The Act itself, under Section 54, regulates for you the trust account that you need to open, and it also regulates investment of trust funds for customers where the customers have requested that to be done. So your trust account is an interest-bearing account that you open with a bank. It is always accompanied by a business transactional account that you open with the same bank. Most financial institutions will insist that you open a business account, transactional account, together with your trust account. Why do we, sorry, I'm seeing hands, potentially. Can everybody hear me? Naledi, I'm seeing a hand up on the webinar.
Yes, no, she did had raised her hand in the beginning, but we'll take
Okay,
the hands after the webinar.
no
If you can
problem.
hear Miss Marais, please give a thumbs up. Let's just make sure colleagues can hear you so we don't disadvantage them.
Perfect.
They can hear you, yes.
Yes, it does look that way. Perfect. Okay, there's quite a few hands. Colleagues, I'm going to finish the presentation and then I will hand over to Naledi to manage hands afterwards. So trust accounts and business transactional accounts go hand in hand. Why do they need to go hand in hand? Because trust account fees cannot be debited directly to a trust account. Transacting fees on trust accounts cannot come off trust funds. Why? Because the trust funds are funds belonging to third parties that you hold on their behalf. So your transactional fees will always be debited to a business transactional account. It is an automatic operation that banks facilitate for you. And that's why they need to go hand in hand. Similarly, payments that are needed to be made in many instances may, if they are not able to be made directly out of a trust account, you have an ability to move funds to your business account. If you need to make payments on behalf of your third parties, that functionality is also available. As far as opening accounts goes, we all know that opening bank accounts can be a headache if you need to go into a branch and open an account. The offering that ABSA gives us is that, in fact, you can deal directly with investment managers. At ABSA, we have a whole division that is set up specifically to support property practitioners. It's a division of trained, skilled investment account managers. The product that we provide for you is a third-party fund administration product. It is a software package that you rent from us. For practitioners starting out in business, such as yourselves, we have offerings where we can waive our administration fees and our rental fees to enable you to get your businesses off the ground. Your investment managers provide end-to-end hand-holding support for you through the process. They install the software packages in your offices. They do online training. They do demos, and they really walk with you every step of the way. The good thing is that they also support you if you do not already have a business transactional account with ABSA, but you'd like to take the trust fund administration package with us. They will support you with opening a business transactional account to accompany your trust account product. These investment managers can actually be contacted by way of email. And when we share our slides after today's webinar, I will provide you with all the email addresses. We operate in regions, and our regions may not necessarily make sense to you from a direct province perspective. You may use any one of the addresses that you think you may fall in to. All you need to do is just put the name of the town where your business is operating, and we will redirect those requests internally to ensure that your support comes from the correct region. As with all opening of accounts, it is standard regulatory requirements. We take FICA documentation for your business. If you are running a business under a juristic entity, company or closed corporation, we will take your company documentation together with FICA documentation for your directors and your shareholders. As you know, the FICA Act requires us to assess all directors as well as ultimate beneficial owners of all jurisdicts. So we will take that documentation for onboarding. We use the same documentation to onboard you for your transactional account as well as your trust account. Important criteria for you to have a trust account is that you need to have a Fidelity Fund certificate. issued by the Property Practitioners Regulatory Authority. That, of course, is a regulatory requirement, and we will not be able to give you a trust account without a certificate. What we have assisted with, understanding that these are all new requirements and that there can be delays in issuing your Fidelity Fund certificates, we are comfortable if you can provide us with confirmation that you have started your registration process with the Property Practitioners Regulatory Authority. We will assist you to open your business and your trust account. While you are registering, we will issue you with a letter for the regulatory authority so that they know that you have opened the trust account. We can open it in your name, but we do place holds on those accounts, so you will not have any transacting capability on your trust account until you submit your Fidelity Fund certificate, but you can get everything in place to allow you to start business the minute the account is opened. Around the transacting fees, the fees that will be debited to your business account for trust account transactions will be one-on-one transactional fees only for now, because we will waive rental fees and admin fees to allow you to get your business up and running. Interest on these trust accounts, I've said to you that they are all interest-bearing accounts, your Section 52(1) accounts. The interest on those trust accounts accrues to the Property Practitioners Regulatory Authority, and that is payable under your returns to them and your reporting. The software that we provide to you gives you access to reporting. It also allows us to report directly to the authority and pay your interest over to them in accordance with the monies that flow through your account. When a customer would like you to invest funds specifically for their account, what does that mean? That means that the interest accrued on the monies that they have provided to you are payable directly to them and not to the regulatory authority. For that purpose, as you know, you can open a Section 52(2) investment account. You have that capability in your software package to manage it yourself. There is no need to come to the bank every time you want to open an investment account. Your software package has that capability for you. You open that investment account within your trust account. It gets the name of your client, and the software package will accrue interest to that account. Those interest rates are negotiable with the bank and the client, so that we make sure that we are able to give you the best rates possible on your client's investments. The interest rates applicable to your main Section 52(1) account, those run at standard interest rates. That money is payable over to the authorities, the regulatory authority. But your clients have the capability to negotiate interest rates, and you will do that with us on their behalf. One of the other topics that the authorities have asked us to address with you is just closure of accounts. So a trust account, as I've said to you, is intrinsically linked to your business transactional account. If your business transactional account is closed, either due to being dormant or due to any other FICA requirements, that will automatically place a hold on your trust account and end up closing your trust account if the business account ends up being closed. What happens to the funds in that account if it is closed? Those funds obviously belong to third parties, and the bank will facilitate payment of those funds over to the Property Practitioners Regulatory Authority on their instructions, dependent on where they would like the funds to go, either directly to them to disperse back to the clients that paid it, or alternatively, they may move the management of your account to another practitioner or a curator, depending on whether one has been appointed, that will be facilitated by the bank. Account closure can also happen from your side. Should you decide to move your trust account or close it or close your business, any request to close a transactional account will be actioned for you as and when it comes through. A closure of a trust account does not necessarily mean your business transactional account is closed. We will just close the trust accounts on your behalf. Naledi, I think that for me is where I'd like to leave it. Colleagues, we will share slides giving you all this information because it is a lot, and giving you ABSA contact details so that you can contact our investment managers for any other questions you may have. And we will also then address questions at the end of this webinar to demystify further.
Okay, thank you so much, Ms. Marais. Let me welcome the next speaker, Ms. Portia Letlape. You may unmute and take us through the presentation.
Thanks, Naledi, and good morning, colleagues. Happy Wednesday. I'm in Johannesburg. I'm not sure where everyone is around the country. It does feel like we are finally getting some rain. As Naledi mentioned, my name is Portia Letlape. I'm the head of product at ABSA Home Loans. I'm going to take you through the products that we offer from an ABSA perspective. I'm going to share my slide. And because it can be quite a lot, Naledi, you let me know if you see my slide.
Yes, ma'am, I can see your slides. Can colleagues see? They're giving me thumbs up. They can see.
Awesome.
Yes.
All right, great. So I'm going to take the journey with you. And if you look at the screen, there's a young man who's riding a bicycle. And let's name him Thabo. So Thabo has dreams of owning his own, property portfolio at some stage in his life. He's got dreams, and I'll take you through the different products that we have, taking Thabo along his journey. So at ABSA Home Loans, we believe that property ownership is not a destination. It is a journey, and we tell our customer stories, and we help our customers build their stories through the products that we design. So if you think about it, when Thabo starts looking at property and actually starts dreaming about owning a property, Thabo will need to do a bit of research, right? And in most instances, he would have reached out to some of you as property practitioners because he would have seen a property that he loves, and he actually doesn't even know what it takes to buy a property. So what we do at ABSA is that we've got a training program that sits on our website. It's called the My Home Owner Journey. It really helps customers understand the ins and outs, of property ownership. It's a free tool. Anyone can access it, whether you're an ABSA customer or not, and take themselves through, that content to understand, the information required, in terms of what it takes to own a property. And usually, and some of you may agree with me, customers don't usually go through the pre-qualification tool as well as the bond calculators. Usually they look at the property and then only do they realize whether they qualify or not for their property. So what we do have on our platform as well is a home loan pre-qualification tool, also open market, anyone can use it. For customers to establish if they can actually qualify for a home and the dream home that they're looking at. And, we also give them an estimate of how much they can actually qualify for. And we issue them a certificate that they'll be able to use when they come to you, and they look at, properties. They can give you the confidence that they do actually qualify to buy a property because we actually do some scoring behind the scenes. And when we talk about first-time buyers just now, you do know that first-time buyers, especially first-time buyers, really don't anticipate, all the costs that come with purchasing a property, your bond registration costs, your transfer costs, and all the additional costs that come with it. So we've got a bond calculator as well that actually breaks down all the different costs that a customer would have to pay for a particular value from a property perspective. So we also wanted to talk about affordable housing, but if you look at this slide, we are really looking at the different customer segments that we serve across, the country in relation to the different income segments, right? So we do know from a low cost housing perspective, government is doing some work from that perspective. We also have, what we usually call the gap market, something between, affordable housing and low cost housing. And usually, from a government perspective, they term it customers that earn between 3,501 and 22,000. Let me use my pointer so you can follow my conversation. So anything between 3,501 and 22,000 is what government would term gap market, and we'll talk about first home finance grant here. And then from an affordable housing perspective, we also look at customers who earn, a gross income of up to 32,000 rands, total household income. So we've got some, products and value propositions that we offer to this market to ensure that we actually help South Africans get access to housing. And then, of course, beyond that is what we know as most of the customers that we serve in the property ownership market. So for customers who fall within this bracket, which is 3,501 and 22,000, the Department of Housing of Human Settlements actually has a grant that is called First Home Finance. And essentially what this First Home Finance means, let me just move to it quickly. First Home Finance is for customers that earn 3,501 to 22,000 Rand. And customers can actually access the grant up to a maximum of 169,265. And what is really beautiful about this is that you can use the funds to either pay as a deposit. We know that there are instances where the bank would lower offer a customer and ask them to pay a deposit, and this grant will be able to sort of bridge that gap between what the bank is asking for and what the customer is asking for. They can also use it for attorney fees, as well as reducing any initial, loans or costs that come with the property. So essentially what a customer needs to illustrate is that they are South African, they are 18 years and older, and they've never actually benefited from any grant from a government perspective in the past. There is a process. When we share the slides, you'll see the contact information from an NHFC perspective. This is really important from an access perspective because we know a lot of South Africans, especially in the lower income segments, don't have disposable income to pay for, bond registration costs and deposits, etc. And this is government's way to enable South Africans to have access to housing. And we play a critical role in supporting government from that perspective because the money is then paid into the ABSA accounts, and we are able to, where a deposit is required, reduce the customer's outstanding amount. Now, what we do over and above that, for customers that earn even up to 32,000 rands, what we do as ABSA, and as I mentioned earlier, first-time buyers always struggle with bond registration costs. So what we have done is that we have negotiated with a panel of our attorneys for a discount on bond registration costs, which actually helps, from an affordability perspective to settle those costs that are required. We also know that may not be enough. So customers can actually also apply for a loan amount above 100%, meaning that additional 5% of the loan amount is paid over and above, to cover the property sale as well as the bond cost. So we also facilitate that process in order to make sure we enable our customers to have, to move into their dream homes. So that was affordable housing. So anyone who earns above 32,000 and is a first-time buyer, we've also done the same. They get 50% discount on bond registration costs. And then because their property prices are slightly higher, we give them up to 106% of their bond, of their property amount, with the additional 6% used towards covering the bond registration and bond transfer costs. And we cap it at properties of up to 2.5 million rands. So Thabo has now moved into his property, and he's now maturing. But I also want to mention that where it's a non-first time buyer, we do also offer up to 100% LTV, loan to value, meaning that we can actually cover the total purchase price. However, the 50% discount won't be available for non-first time buyers, but I'll talk to you about where we do offer it for a certain type of customer base that we're looking at. Now, what the customers have options to choose from an interest rate perspective is that one can choose, usually we do have variable interest rate. We know most of us actually felt it over the last couple of months. When the repo rate goes up, our rates also go up. And it's really linked to prime. And what customers have started doing is that they've started fixing their rates. So you can, we do offer fixed rates for our customers. Fixed rates does become a little expensive, but it's a matter of at what point you fix your rate. So if you fixed your rate when the interest rates were at their lowest, you're most likely going to benefit from it. And if you don't fix your rate, obviously you tend to benefit when the rates go down. We know that we are anticipating a rate decline in the next couple of days. At ABSA, we also offer bonds. The terms can go up to 30 years. And this actually makes it even more affordable, right? Because the longer the term, we know the more affordable or the lower the installment payable is required. So those are the options that we give our customers. For customers who don't have an ABSA check account or an ABSA transactional account, because having a transactional account with us is also important to us, because customers do tend to benefit quite a lot when they do have a primary relationship with us. And I'll share some of the nice offers that we have from an ABSA Rewards program perspective. We do also offer these customers a further concession on their home loan rate of minus 25 basis points. All that the customer is required to do is to make sure that they open a new ABSA check account, they load their debit order against this ABSA check account, and that they keep the home loan account up to date. And for as long as they meet these conditions, they will continue to benefit. We're doing some calculations the other day. On a R1 million property over 20 years, if you do get this 25 basis point and you actually meet the conditions throughout the term, customers can actually save up to 41,000 rands in interest charges. So it's quite a huge saving from that perspective. So let's assume that Thabo has now grown, his family has expanded, he got married, and he's ready to, move into a much bigger property, and he still has his home loan with us. What we do from an ABSA perspective is that if a customer is an existing ABSA customer with a home loan with us, they're selling the existing property to purchase a new one. Because they're a loyal customer of ours, we give them additional benefits. So we give up to 25,000 Rand cashback, calculated as 0.50% of the loan. This cashback is paid hard cash. Here you can actually withdraw it, but it's paid into the ABSA Rewards account, and the customer can withdraw, that amount from the ABSA Rewards account. However, it will be paid into an ABSA check account. So going back to that 0.25 concession, if Thabo had opened an ABSA check account, then he would be able to access this 25 basis points. So if a customer doesn't have an ABSA check account, unfortunately, they wouldn't be able to qualify for it. However, all customers will get a 50% discount from a bond registration perspective. So this is one of those where we give non-first time buyers also the benefit of that 10-year discount. And then we know that Usually there's an early termination fee that is charged if you didn't notify the bank that you will be cancelling your bond within 90 days. For these loyal customers, we waive this early termination fee, and it can be quite a lot for those of you that have seen those settlement figures coming through. So that's what we do for our loyal customers. What we have found is that your more matured, more experienced customer understands how to use the home loan account to benefit them, right? So your first-time buyers usually just buy the property and continue paying. And we're hoping that through these conversations, we can also start educating our customers around how they can make use of their mortgage bond, right? So where a customer, and Naledi, I know that there's, experienced practitioners on the line and those that are actually starting out. So I'm going to try and, explain some of these concepts. So pardon me for those that already understand the concepts. I'm doing it for the benefit of those that aren't close to this or are new to this space. So when we know that the property appreciates in value, right? So if you bought a property at $1 million, in a couple of years' time, the market value of your property would have increased. Let's assume in this example, the market value has now increased to 1.2 million, right? So this essentially means that you've got equity in your property, right, that you can actually access if you do borrow from the bank. So if, let's say, your outstanding balance in a couple of years' time is sitting at 800,000, you bought the property at $1 million, and now the value of your property is sitting at 1.2 million. It means you have 400,000 rands in equity that you can access, right? So if you say to the bank, I don't want to register an additional bond, I want to access the 200,000 that I've already paid, we call that a re-advance. So essentially what you do is you go to the bank and you say, I'd like to apply for finance. The 200,000, we calculate, of course, whether you can afford it. We pay out the 200,000 rands, and obviously you pay it back. Using your mortgage bond is one of the cheapest way to access finance. If you compare unsecured lending, your credit cards, personal loans, etc., to your home loan, this is one of the best rates that you can actually leverage. So however, if you feel that I actually need that 400,000, you register a higher bond. You register another 200,000. Now you've got 1.2 million rand registered at the deeds office. We do our credit assessments, and then you can actually access the full 400,000, and that's called a further advance. What is really unique to ABSA, and none of the banks have this, is what we call the multi-plan. So going back to the example that we used, that 200,000, let's say re-advance, or 400,000 further advance that you applied for, you can actually ask the bank to structure it in a secondary account. So you will sit with your 800,000 rands in your primary account. The 400,000 sits in a secondary account, and you can actually ask the bank to give you maybe a shorter term, right? Because let's say you're using the funds to pay for your child's varsity fees, as an example, and you don't want to be paying for varsity fees for another 15 years. You could say, I need 400,000 rands. I'm going to do, pay for varsity fees. I want to be able to have paid it off in the next 4 years. We can actually structure it over the term that you choose to be paying it off. What is really nice about, the multi-plan is that you have, you will actually start seeing a saving from an interest charge perspective, because as we all know, the shorter the term, yes, the higher the installment, but the lower the interest charges, because you don't have a long term. We also do encourage our customers to really consider a future bond. So let's say Thabo bought that property at $1 million, and he knew that in about 4 years' time or 5 years' time, he would want to come back and access funds because it's now time to pay for his child's school fees. We encourage our customers to register a higher bond. So meaning that he would have registered a bond of 1.2 million. And instead of waiting for the bond to register, which could take about 8 weeks or 6 weeks in some points, he would have been able to access the funds literally within a week or two, because re-advances we process much quicker, the payout is much quicker, there are no bond registration costs as well that are payable if you chose to go the future bond route. So we do offer that for our customers. I'm checking if you can still hear me, Naledi.
Yes, ma'am, we can hear you.
Okay, awesome. At ABSA, we also have a Flexi Reserve product. So essentially, a Flexi Reserve means that for customers that have prepaid on their home loan account, so let's assume your installment was 3,000 rands as an example, and you choose to pay an additional 500 rands. The additional 500 rands that you pay over and above your minimum installment is what we call prepaid amounts, right? So the prepaid amount gets paid into the account, but what we do at ABSA is that we move the additional amounts that you have paid into I'll call it a pocket for now. So we avail the funds to you so that as and when you want to access these funds, you're able to access the funds. So for those that have got ABSA accounts and do have ABSA home loan accounts and you are prepaying, you would see that that amount is always available for you to withdraw. Simply you transfer from your home loan account into your transactional account, and you can use it as you wish. The beauty about prepaying or having a Flexi Reserve is that we actually calculate your interest charges on the outstanding balance, taking into account the prepaid amount. So as you prepay, your outstanding balance reduces. So when we actually calculate your interest charges, we take into account that that payment has been done and your outstanding balance reduces as well. I find that a lot of our customers actually enjoy using this this benefit because it helps them to reduce the charges that we have. We do encourage it from an ABSA perspective, because what is nice about the Flexi Reserve is if you don't withdraw the money and you keep it there, you could choose actually to call the bank and say, capitalize the amount. I don't want to have access to it because you know that you may be tempted. And if you do choose to do that, it means that we will recalculate, your installment. We'll reduce your installment further. And yes, you may still pay the bond over the remaining term. However, if you continue prepaying, you can actually pay off your home loan account much sooner. We have seen some customers, paying off their bonds within 8 years, and some because they choose to prepay. So what it then does is that it starts unlocking the opportunity for our customers to become property investors, right? And speaking of property investors, we know that there's the biggest challenge from a property investment perspective, especially those that want to buy their next property, is that my salary can only afford the primary primary home that I live in, but I have aspirations of moving into or buying another property and building a property portfolio. So at ABSA, we've got a product called the ABSA Buy to Let. So essentially, Buy to Let means that you're buying a property for the purpose of renting it out, right? So here's Tabo and his family. He's now at a point where they are thinking of buying their next property. So what we do is, if you have an existing property and you want to purchase another property, we've got a feature in the ABSA Buy to Let product called future rental income. So if you, let's say, want to buy a property, let's say a small apartment at $1 million as an example, we take into account the fact that you will be receiving rental income, and we take the rental income and we calculate it, we add it back from an affordability perspective as income. What it does is that it makes, access to rental properties more accessible, because it unlocks that affordability that a lot of customers are struggling with. So you must have at least one property to be able to buy the next property from a buy-to-let perspective. We also have what we call existing rental income. So existing rental income essentially means that, and usually what we have seen is a lot of property investors use it where you are buying a property that already has tenants in them, and there are financials or statements, bank statements that prove that you have been, receiving, or the previous owner was receiving rental income, or there is a lease agreement in place. You put it forward and you say, I've got tenants. This is how much they pay, and therefore I will be collecting, rental income. So then that also unlocks, affordability. we know that a lot of people or our customers, especially those that are starting out from a property investment perspective, are looking for ways, or let me call it knowledge, to be able to build their property portfolios, understand what it takes, to manage a rental property. So we have a couple of partners of ours that we work with. One of them is called the South African Property Investor Network. Short, we call it SAPIN. SAPIN is a network of property investors. I'm sure most of you have seen them on social media. And essentially what they do is they host webinars, they host events, they host training programs, and they make sure that there are like-minded people in the rooms. They discuss deals, they, share knowledge amongst themselves, challenges, etc. And so if you take up the ABSA Buy to Let, then you also get free 6-month foundation membership with SAPIN, where they actually do take you through what it takes to be a landlord. So going back to Tabo's example, Tabo is now umastandi, the landlord, and he now needs to understand what it takes to, manage this property portfolio. So that's where SAPIN comes in. We also have a partner of ours called TPN. So TPN is a rental bureau. So they collect a lot of information around rentals, occupancy rates. They also have quite a lot of tools at their disposal that we also extend to our buy-to-let customers. Things like your lease agreements. They also do screening. They can help you do screening for your tenants to make sure that you've got the right tenants in there, notifications to the tenants if they, miss payments, etc. They've got a whole host of tools that a property investor can use. And of course, if you are a property investor, you may want to start looking at, going into the business banking side of things and opening a transactional account so that you can separate your personal transactional information to your business account. So we do offer those as well. I think Tanya also spoke to business banking. So one of the things that we also offer at ABSA is building loans. So there are customers that choose not to buy a property, of course, from somebody else. They choose to build their own property, their dream homes. We also do offer building loans. With building loans, we offer up to 100% LTV. We do expect that the property must have been built within 9 months. And we also give, I think the beauty about our building loan is that interest charges, the installments are only payable after the 9 months. We do charge interest, but it's not payable immediately. So that's the building loans that we have. Naledi spoke about the ABSA Eco Home Loan, which is from a green mortgage perspective. So it is one of those things that I think the industry is really talking about. Some of you may have seen the likes of Baldwin, Cosmopolitan, New Bosch in Cape Town. A couple of developers that you've seen where they're actually conscious about building green properties. So we launched South Africa's first eco home loan in collaboration with Baldwin Properties in 2020. And essentially when we started with this proposition, we gave a concession of 25 basis points for customers that choose to buy in a Baldwin development that is green. And how we define green is there is a certification that is issued by the Green Building Council of South Africa, which is called EDGE, EDGE. And what that certification actually means is that the property has an energy and water efficiency of at least 20%, as well as embodied energy reduction of about 20%. So embodied energy means the material that was used, the way the structure has been built, and this is important for us as a bank. And I think over time, we'll start seeing more and more properties being developed with at least the water and energy efficiency built into it. Is that obviously we all know from a climate change perspective, we need to make sure that we reduce our carbon footprint. And in 2023, last year, we signed the IFC magic transaction. And this is an additional benefit that, the IFC has put on the table to help us, try and drive green mortgages as far as possible. So where a customer buys in one of these green developments, over and above the 0.25, we give up to 3% of the loan amount back, which is paid into the home loan account. The first 1.5% is paid at the first stage of the certification process, which is at prelim stage, and the last 1.5% is paid when the developer actually finalizes the edge certification. The table on the bottom right illustrates the actual saving that one could get, right? So if you remember, I said on a million rand, 25 basis points is about 41,000 rands in interest charges. But that additional 3%, which is 30,000 rands, can actually push up the saving to about 114,000 rands in interest charges, right? We pay the money into the account, we capitalize it, we reduce the outstanding balance. You pay even less, from an interest charge perspective, and your outstanding balance is reduced. Also, in the spirit of going green and protecting our environment, we have launched, our solar finance propositions. If you recall, I spoke to you about the further advance, earlier, where I spoke about the equity, 200,000, 400,000. I'll show you now how you can use it, from a solar energy finance perspective. However, we do have tools on our ABSA website. It's called, if you just go on the ABSA website and you go solar and energy finance, it will take you to our page. We've got a partner that we've partnered with who does solar installation. And why we did that is because we know a lot of customers are thinking about going green, putting up solar solutions. But our customers are telling us that they don't know who to trust. So hence we've partnered with someone whom we believe that they are credible. We've done all our checks on our side. We know they've got a physical presence of about 54 branches across the country. And one can walk into any of their branches if they need further assistance. So there are calculators on the website as well that gives you a sense of, for the amount that you're looking for to do your solar installation, how much would be your monthly installment, how much would be your interest charges, etc. We also have articles on the website that speaks to, as an example, if you choose not to use our partner and you go with maybe the guy who's servicing your complex and everyone is raving about, how do you give yourself comfort that this is someone who is indeed credible? So we give you some tips in terms of what is it that you can look out for. Over and above home loans, customers do go for personal loans. Some of you would have known about the bounce back loan that the South African Reserve Bank has, given out to most of the banks to offer it. So we do have it as well. Some customers can choose to save. However, our most recent product that we've built from a solar and energy finance perspective, is what we call the solar and energy loan. We've got two options. Essentially, customers can use either a further advance or a re-advance. I explained that one earlier. And what we ask is that the further advance or re-advance loan amount that the customer is asking for is structured into a multi-plan, the secondary account that I explained earlier, over a shorter term, right? And the two options that are available is that you can either choose to put it on 7 years or 5 years in terms of the term that you can choose. We cap it at 300,000. So you can only take up a loan from a solar finance perspective of up to 300,000. We know this is sufficient. Average ticket sizes, I think, don't go beyond 200,000. At least that's what we've seen. And if you choose to take it on 5 years, we give you an additional 50 basis points concession on that loan amount, which actually makes it even more affordable and reduces, your installment and your interest charges. However, if you feel that, 5 years is too short, I don't think I can afford it, you can choose to do it over 7 years, and there we give a 20 basis point concession. This one is a limited offer. It will end next year in March. So because this is the SARB loan that we have. Also on our website, there's quite a lot of information. I wanted to touch a little bit, Naledi, if you don't mind, on international mortgages. I know we don't talk about it much, but we have, I've seen a couple of, customers coming through and asking for a non-residents. And Tanya, you would, I think at some point, maybe just give a little bit more information because it is regulated. Non-ABSA, non-South African citizen can invest, in South Africa when they buy property, and we call that international mortgages. However, there is, and this is regulated, a requirement for the customer to pay a 50% deposit, but it is attainable for those that want to buy property in South Africa. We do know that with the high interest charges that we've seen over the last couple of months, customers are really looking for ways to, to reduce the interest charges. And customers are shopping around, actually. We do get customers, asking us, can we give them a better rate? So we have a switching proposition where we allow a customer to move their bond, not to move out of their house, just transfer the outstanding balance to us. It's called the Great Escape. It's our switching proposition, where a customer applies to switch a bond from one bank to another, to ABSA in this case. And the loan amount is at least 500,000 rand. So 500,000 rand or more. We'll also offer bond registration discount, right, of 50%. We have, I think one of the things that is important to mention as well, because I find that, when we talk to industry in some instances, there's a misconception that there are also transfer costs payable when a customer switches. So if a customer switches their bond over from one bank to another, they don't pay transfer costs. They only pay bond registration costs. So it's only the bond attorney that gets involved. So the 50% discount is negotiated by us with a panel of attorneys to reduce the cost of switching between banks. We also give up to 20,000 rands of the remaining bond costs. So half of, we discount the 50%, whatever that remains, up to 20,000 rands, we pay it as well to make sure that really the customer doesn't have to pay anything to switch over to us. Of course, the customer must have an ABSA check account, load their debit order against the check account to be able to benefit from the 20,000 rands. The other attorney that gets involved is a bond cancellation attorney. So the bank from which the customer is switching from will appoint a cancellation attorney who will, make sure that the cancellation of the bond from a deeds perspective is handled. Usually this costs about 5,000 rands. We will pay for the bond costs of up to 6,000 rands for the cancellation to be done. So over 98% of the time, customers actually don't pay anything to switch. And customers actually do have, the ability to negotiate with us when they switch their bonds. And, because, essentially that's why most customers do switch, unless if it's about service. And it's also important to talk to our customers around protecting their assets, right? So homeowners comprehensive insurance, which we call HOC, property insurance, for a lack of a better term. Most banks, and I think ABSA, we do it, and I think most banks do it as well, is that it's usually a condition of loan. So the bank requires our customers to have property insurance in place when they take up a bond with us. If you are a sectional title, usually we all know that the body corporate itself will have HOC in place for the body corporate. But for standalone customers, we do offer HOC. And as you can see, there's all the features that are there: fire, wind, theft, earthquakes, etc. We also cover power surge, so of up to 10,000 rands. We offer home assistance. I think what is really nice about our HOC is that we also cover rental loss of up to 12 months. So if there was an event and your tenants had to move out because let's say the house burned down, but you had tenants, we are able to make sure that we still give you that rental income that you may have lost, from an insurance perspective, because of course the bank would still expect, the payments to be done. And then life insurance is one of the products that we offer as well. I wanted to also talk about our ABSA rewards because I don't think that we talk about it enough, and why I kept emphasizing the transactional account. If you hear throughout the conversation, I've been emphasizing that it's great if you have your check account with the bank where your home loan is that, and you've got additional products with the bank. For our tier 5 customers, so for those that are with ABSA, you would know the different ABSA tiers. We've got, and if you've got a credit card with us and you used your credit card as a tier 5 customer, I was joking the other day, Naledi, in one of the conversations, I said to someone, I get paid twice at ABSA, my normal salary, and on the 1st of every month, I anticipate a salary from ABSA. And if you shop from Pick n Pay, Woolworths, Food Lovers, and you swipe your credit card, in terms of your spend, let's say you spend, there's a maximum spend of 3,000 rands, we give you 30% cash back. So on 3,000, that's 900. If you choose to pay with your credit card at Cecil and you spend 3,000 rands, we give you an additional 900,000. If you buy from Dis-Chem, your toiletries, your cleaning material, etc., maximum spend of 3,000 rands, we give you an additional cashback of 900 rands. That's actually 2,700 rands a month, not a year, 2,700 rands that you could expect a month. For me, that's payday every month from ABSA. And why I'm talking about this from a property perspective is, imagine if you took this 2,700 Rand and you paid it into your home loan, what it would do in terms of reducing your interest charges, right? And 2,700 over 12 months, 32,000. For the duration that you're with us, 648,000 Rands. That can be paid to you in cash. And of course, we don't tell you what to do with your money. You can withdraw it. You can go on a holiday. You can choose shopping spree, whichever way you want it, because it's the money that you've earned. So when we do talk to our customers and we talk about the check account, I think it's always good to be talking about what having a check account with ABSA actually means, and some of the real benefits, from a cash perspective, also are. I'll leave it there, Naledi.
Thank you so much, Ms. Letlape, for the presentation. It was really informative, and I think it's important that we share the slides so they can go through the information again. And I see on the chat, colleagues are saying share the recorder. We will not be emailing the recorder, colleagues. We're going to share it on our YouTube, PPRA TV, so that you can go back and watch it over and over. And Ms. Letlape, if you can share, I don't know if it's okay if we can share your details, because I saw at the end of the presentation, maybe they would have wanted to see your email and your cell phone number if they were to reach you to discuss, the products further. I am going now to go to the chat so that we can look at the questions that we've been receiving as you were presenting. Ms. Tanya Marais, Ms. Portia, I'm going to pose your questions and I'll give you a chance to respond to the practitioners. There's a question from Isaac. It's going to Ms. Tanya Marais. He says, can you please tell us how many types of trust accounts do you have at ABSA?
So just to clarify, are we referring specifically to property practitioner trust accounts? My sense is we would be on this audience. So we have, there is only one trust account product for property practitioners, which is your Section 52(1) trust account. We do obviously have other trust account products for attorneys. Those are regulated by the Legal Practice Act. And then we have special products available for property managers, so your management companies that look after body corporates and homeowners associations. But for property practitioners, specifically acting as estate agents, we use the Section 52(1) trust account. I hope that answers the question.
You're on mute, Naledi.
Oh, sorry about that. Yes, I'm saying it does cover it, but if maybe Mr. Isaac Banda is not sure about the way you answered it, I'm going to give them access because I have two hands. I think we can take those two hands and hear the questions. But before I do that, Ms. Portia, there's another question coming for you. It says, can a 65-year-old person qualify for a bond if still employed permanently? Ms. Mutlape?
I'll ask Tanya to help me with it. Tanya, I'm going to ask you to help me with this one because I know that there are some rules from a credit risk perspective that we need to take into account. Thanks.
Absolutely. So yes, a 65-year-old person that is still employed and earning a monthly salary may take a home loan with ABSA. The product requirement is that you have to pay off your home loan by the time you reach the age of 75. So if you apply for a home loan at the age of 65, the maximum term that we will be able to give you on that loan is 10 years.
Okay, no, thank you so much for that. Let me see if I have another question on the chat. Muitepi says, how does ABSA assist the new real estate business owners with startup loans in an event where the agent who is starting the business had a bond with ABSA, but it's paid off?
Portia, I'll take a piece of this. So ABSA does have supplier development programs, and that is potentially Naledi a topic for a webinar on another day. Of course, Portia and I don't deal directly with those offerings, but we definitely do have supplier development projects that support new startup suppliers with funding capital, operating capital, and all. As it refers to the bond that is already paid up with ABSA, if that customer has had a home loan with ABSA that has been paid up, but the bond is not cancelled yet, it would depend on the type of mortgage that was registered. That mortgage could still leverage as additional security for lending for your business, but your loan would have had to have been taken up and your mortgage bond registered prior to 2014, failing which we would have to register new mortgages if the property is taken as collateral. But it's not necessarily a strict requirement for business development startups. Our credit teams in those environments will determine the security needed when they support with those types of applications.
Okay, no, thank you so much. Let me go to the hands. We have a few questions coming from the floor. I'm going to take the first hand is from Estelle. Please unmute yourself, Estelle. Let's hear your question. Estelle? Okay, I'm going to go to Richard. I'll come back to you, Estelle. Richard? Please unmute.
And
Okay. Yes, we can hear you, Richard. Please ask your question.
My first question is, I've got a client who is an ABSA client, a commercial ABSA client, and then she's actually insisting that we open an escrow account, after which I had indicated to her that I do have a trust account for the transaction that the rental will be coming through, but she's insisting that we need to open an account. So my question is just to try to understand the difference between this escrow account and the trust account, how to go about it if we were to go the route of the client. And the second question is obviously just to try and find out, how do we go about as ordinary agents to get through to your easy sale properties or auction houses, or to be on your panel for that matter? Thank you.
Thank you.
I will listen on the radio.
No problem. So Portia, if you'd like me to take the escrow account question, I think it is important to just get an understanding from your client as to what she means when she says an escrow account. Potentially her need is for her rental deposit to accrue interest for her account while during the term of the rental agreement. And for that purpose, you can use your Section 52 investment account capability to invest her rental deposit. I'm not really sure that specifically an escrow account is needed, but she would know what her requirements are. If she is wanting to benefit from the interest on the rental deposit, you can use your trust account and open a trust investment account for her within your Section 52.1, and those are the investments that you do in terms of Section 52.2. If it's not that requirement, then I would propose that she speaks to her relationship executive that manages her business accounts with ABSA to understand what offerings there are from an escrow perspective. I don't know that that is something you can do on her behalf.
Okay, are you answered, Richard?
I think that. Hey, Richard, did you want to continue with your question?
Sorry, Richard, does that answer your question around the escrow account?
Yeah, it does touch a little bit on that, but I mean, what I wanted to find, because I mean, this client, she's the landlord, and I'm the agent. So there is an action that we did together. I brought in tenants to a building, and then she's saying that I mean, for the proper management of the funds that are coming through, what we need to do is to open an escrow account. That is an advice that she got from our relationship banker at ABSA, to say we need to open an escrow account where both of us going to have access to the account, and then ABSA is going to be managing the account on our behalf. So what is going to happen is, say 100 rand is deposited there as rent. And then my commission is perhaps say 30/70. There is 30 rand on that. I take my 30 rand, and then she takes a 70 rand. So I just wanted to find out from you as to wouldn't this be somehow, since we are supposed to be running trust accounts, so won't this be somehow, I mean, a deviation of some sort?
Tanya, sorry for interjecting. If I may,
thank you, Vanna. I'm so pleased.
No problem.
So Richard, please let me introduce our colleague, Vanna Jacobs. He in fact heads up the third-party fund administration offerings in ABSA, and I'm almost certain he's going to answer your question. I was going to take it away to check with him. Thanks, Vanna.
Thanks,
thank
Tanya.
you.
So, Richard, yeah, to your point, I think there's a bit of a miscommunication, and I see there's also in the Q&A asked from Chris pertaining to the third-party, as we refer to it as TPFM, our third-party fund management platform, that basically provides the self-service functionality, almost like internet banking, that's fully compliant with the Property Practitioners Act, that will then allow you as the property practitioner to open the correct Section 54.2 account, the rental deposit account for that specific tenant. We also then have what we refer to as an administrative module where, as you mentioned, your rental deposit commission can be deducted every month automatically from that rental deposit that you receive, and you will then just do a payment to the landlord to say, all right, the remainder of the interest from the rental deposit is paid over to the beneficiary or / landlord in that case. So I hope that answers your question, Richard. So this system basically gives you all that functionality in order to open the correct compliant account. No escrows are needed because it's per to the act stipulated, and you've got full transaction capabilities on that account, and you have been appointed as the property practitioner to receive the rental deposit into the compliant account, etc. And if I may then just while, Christy, you said, is there anything that makes annual audits easier or cheaper? So most definitely on that, again, the system, we refer to it as a trust account inquiry report that you can draw basically for the full financial year. That shows you exactly what happened on your Section 54.1 as well as on your Section 54.2 account. And the auditors actually love that because it's a one document printout that you can do on a PDF or even on an Excel CSV format. You send it to the auditors and they've got all the relevant information available in order to do your financial audit on this. And I must say the feedback from the industry, especially from auditors, this is working magic in their lives. There's everything on this report showcasing them. Richard, I just want to make sure I did answer you. You understand more clearly. And if I may, Naledi, also open ABSA up here to say, if there's interest, I would love to do in a similar fashion, maybe a demo of the system to the property practitioners, where they can see firsthand how the system basically will improve their lives as well, giving them that functionality and being compliant with the Property Practitioners Act. And like I said, have real-time action and have these self-service capabilities to work under the Act compliant, opening the correct accounts, being able to draw the necessary trust account reports, etc., and so forth. Thank you so much.
Okay. No, thank you so much, Verna, for that and that explanation. And I think it covered. But Richard, I can also propose that if you have more questions after the webinar, I will share the email. Please email me, and then we can also take it offline so that you are assisted. And yes, the demo, we can do that if practitioners in the room agree and they are interested in that. But I think it will be beneficial for them, and it's important, so they understand how the products and the software work. Let me go to Osposia. Before I move on, did you want to add on Richard, or I can go to another question?
I think Richard asked about getting access to our distressed properties. So I'll take that away if I can just get his details. But I see his details here. It's Richard Ricky. I'll take his details and reach out and see how we can
assist.
I'll get
Okay.
information. Yeah.
Okay. Anita, in the Q&A, I'm going to come to you. Let me go back to Estelle. You are struggling. Please send us your question on the Q&A with the email address and we will assist you. Let's go to Nita. Please unmute and ask your question.
Oh, good morning. Thank you very much. It was very informative. I just want to know, in some of the talks, the lady said we need to give a period that you want to sell your house to give to get some interest, that you don't pay the interest at the end of that 3 months. What happens if the house is sold quicker? You sell the house in a month's time. Do they still give you discount in interest? And can you give notice of you selling your house if you are in behind or in arrears with your bond?
I think the first one, and Tanya, you'll speak to the arrears one, right? So we do, so the expectation is that you give us notice, 90-day notice. And it's actually just a simple phone call to the call center, or you can do it online. Let's assume you gave us a 90-day notice, but your property sold within a month. We then charge the interest, the early settlement fee, I'll call it that, the penalty, the early settlement fee, we charge it pro rata. So the first 30 days that you hadn't sold your property, and then the balance, which is the 60 days, will be what is charged. It's always advisable to do it as soon as possible so that you don't, incur all these costs. But from a arrears accounts perspective, Tanya, I would assume this is also linked to help you sell.
So yes, Portia, we have various distressed property solutions. If you are wanting to sell your property, if you are in arrears, the dependent on the urgency of the sale under our distressed property solutions, of which one is our Help You Sell product, where you sign up with the bank for the bank to appoint a panel estate agent to help you market your property at a specific price that you then get to consent to. In those instances, cancellation figures or early settlement charges, dependent on whether there may be any shortfalls between the purchase price and the settlement amount on the bond, that can be caused by arrears. Those types of fees can be waived in those instances, but they are looked at on a case-by-case basis, as that customer is supported end-to-end in our Help You Sell environment. We treat our distressed customers slightly differently when they are trying their very best to get out of unfortunate situations that they find themselves in.
Okay, thank you so much for that answer. Let's go to Muso. Please ask your question.
Good morning. I just want to find out something. If maybe I have paid the bond for some time and I have additional equity, and I have equity and I want additional finance, do I have to pay transfer duties on that? That's the first question. And the second question, if I have NQF4 and I want to apply for the trust account for my company, but I still have my practice certificate from PPRA, can I get a trust account? Did you get the questions?
Yes, we got the questions. On the NQF, you are not a principal. What is your status? You wanting to open a firm?
Yeah, it's still full status. I'm going to do NQF5 next, but I have the PPRA certificate for NQF4 and PDF4, but I still don't have the trust account. But I was told to be a principal, I have to get a trust account. So I just want to find out if ABSA will issue a trust account in that instance.
Okay, maybe Tanya, before you come in with the trust account in respect to the ABSA side, obviously with PPRA, if you're going to be, you have to write your exams and be a principal first, because only a principal can hold a trust account. You know, it's under Section 54. So there's two ways. If you decide to be exempted from a trust account, but if you're going to hold a trust account, you have to open it. That's where you'll go to the bank and they will give you a letter. Tanya also mentioned that they will assist you with the letter so that you can come and open and get your FFC. But after you've written your exams, and then you have to upgrade from full status to principal property practitioner, then open a trust account. Tanya, can you add maybe on? Yes, sir.
Just before Tanya adds, for the rentals, do I need a trust account, a separate trust account as well?
I will have to check with our audit manager, if and send me an email, and then I'll forward you a question to him.
Now, ladies, so if I may quickly on that answer. So my understanding and the engagements that I had with the PPRA is, so all property practitioners, to your explanation, needs that FFC. Any financial institution can only issue or assist with the opening of a trust account having that FFC. So in some instances, they're in the process of already applying for an FFC. Then the bank can open that, but we put that hold on the 54.1 trust account, which is linked to that FFC. And the only way that you can open a 54.2 account is if you have that 54.1 account. So they go basically, we refer to as a parent-child relationship. So you must have that 54.1 with your FFC in order to have 54.2 rental deposit accounts on that.
Thank you for that. Let me hear Tanya to add.
I was going to say exactly what Vanna had said. Your trust account, your 54-1 trust account is your main trust account. You don't need separate 54-1 trust accounts to receive monies from third parties. It can all go through the same trust account. When you are then splitting funds for benefit of customers like rental deposits, you would open the child account as Vanna has explained it, and that would be your section 54.2. But you cannot have any section 54.2 investment accounts without opening. You have to have a 54-1 account in all instances. That one is mandatory.
Okay, thank you for that. Let me go.
I've also just
Oh,
answered
okay.
Muso's question around if you want to register a higher bond, you want to access equity from a further advanced perspective, that there are no transfer costs, only bond registration costs payable.
Okay, thank you for that also.
Sorry, referring to transfer duty.
No.
Yeah,
only
so no transfer duty.
Yeah.
Sorry,
Thank you so
Portia.
much.
No,
Just from a legal perspective, colleagues, transfer duty, I know that there is often confusion when people speak to transfer costs or transfer fees. Remember, there is always a difference between an attorney's fees and transfer duty. But transfer fees and transfer duty are only ever payable where there is a change in ownership. So a transfer of ownership from one party to another. If you are an existing owner of a property and you would like to take a readvance to Portia's point, and your mortgage that is registered is not sufficient for the additional equity that you want to draw, it may be, in which case you have no new registrations. But if the registered mortgage is not sufficient for the additional equity, you would register a second mortgage, but then it would only be bond registration costs, which is your attorney's fees and your deeds office fees. There's no duties payable to the South African Revenue Services to register a mortgage.
Okay, thank you so much. Let me go to another hand before I go to the chat, Lindy. Please unmute, Lindy.
What an informative session we having here. Thank you to the panel from ABSA. I think we're going to go back to Richard's question. Honestly, Portia, I think that's your name that I remember. As a Black estate agency that has been operating for the last 15 years, and so much business has been given to ABSA, obviously directly or through the mortgage originators that we use. But we still find ourselves not being on the panel of distressed sales, but having to give business back to ABSA. So please look into it. We would really appreciate, because we are registered with a PPRA, have NQF5, all the things that one needs to comply with have been complied. So if ABSA can please just look at that, we'd really appreciate, so that we can actually give back and sell those properties.
Thanks, Melindy. while I was listening in, I was typing a message to our collections team to see what information they can give us, because I've seen a lot of interest coming through the chat. So I may not be able to, take down everyone's email address. I'll just pass it through Naledi. If there's any way you can help us so that we can just share the information wide. I think one of the things that we haven't mentioned as well, colleagues, is that as a state agent, you are able to also have a direct relationship with the bank, to also do business, directly with the bank. There is what we call a, what is it called, Tanya? What is it called? Lead generators.
So yes, so there is an opportunity we do offer, because we are a multi-channel business. We do offer lead generation fees to estate agents that refer clients directly to us for home loan applications. And those fees are earned and paid if that loan is successfully granted and the bond is registered and paid out. So there is that opportunity to earn your revenue directly from the bank. Rather than using supporters, additional parties to help with loan applications. Just on the distressed property panel, just maybe we will definitely take it up. It is a procurement process within ABSA that we do send out to what we call RFP every 5 years. And so Portia and I will take it back to our colleagues to understand at what point we can reassess. It's not a very big panel at the moment, but it's definitely something, particularly I've also seen the chats, it's definitely something for us to look into and enhance. We started with small panels, obviously, just to see how our Help You Sell programs would gain traction. But the more customers that we can help, the better. It's also important in that Help You Sell or distressed sale environment. If you do have a customer, there is a private sale functionality in the Help You Sell environment. So you can also be an estate agent on a distressed sale where you are the agent acting for the seller. But what we will do is take it away to our collections colleagues, and potentially, Naledi, it might not be a bad idea, for us to think about having a webinar specifically for colleagues that are interested in the distressed sale market.
Okay. And so the colleagues just responded to me, confirming exactly what Tanya mentioned. It's an RFP process. What they have added as well, Tanya, is that they need to provide company profile, and it's loaded onto the database. And as and when there's an RFP, they get invited to the panel. So I think that's the update on our side. But I guess, given the feedback that we're getting from this call, I think we'll take it back. So colleagues, we may not be able to come back with, a definite answer to say, send your email, whatever. But perhaps what we could do is give details in terms of how to make sure that your profile has been saved onto the database so that when this RFP process comes through, you already have your information loaded so that you stand, at least in a good position to be considered. But I think the ask is clear. Melindy has also made it quite clear where the biggest challenge is. Thanks.
Yes, you're right, Ospusia, because I see the chat is the same question on, distress sale. And let me go to Clarice. Please unmute yourself. We have 30 minutes. I'll take 5 questions before we close. Clarice, unmute yourself and ask a question.
Hi, Naledi. Hi, the panel. Thank you for the information. I'm struggling to write in the chat box. I wanted to ask for Portia's email address to also get the information on distressed properties.
I think so what I was suggesting is let's send one standard response through Naledi, through the PPRA, so that at least everyone gets to have the same information, because it's going to be easier for to manage as well, if I can ask that we do it that way.
Oh, definitely, that will help. Thank you very much. Thank you.
So I think, colleagues, if you have the same issue, what we're going to do, everyone who registered for the webinar, I have your email address. That communication we will share. I have another hand from Nita. Nita, please unmute and ask. I'm going to go to Anita on the chat after. Anita, sorry, ma'am. Yes, Anita. Okay, she's not, she's struggling maybe. Percival, please unmute. Okay, maybe they're struggling. Let me not, delay on this. Let me read a question that we have colleagues from Anita. It was on the chat. The one for Christo, it was answered by Mr. Jacobs. Let's see, Anita says, how do you inform the bank that you are intending selling the house to save interest rate? What if you do inform the bank and the property sells in a month? I think this one, it was replied, it was covered, so we're going to skip on that. And Portia, I see alert, says, hi, Portia, please also send me details of how to access ABSA PIP properties, easy sell. So
same.
it could be the same issue is. Okay, here she says, can one apply for advance loan from ABSA if the existing bond is with another bank, Alet?
Yes.
The bond has to be with us. Is it Alet?
Yes.
So what you
yes.
can do, Alet, instead of so the easiest way, if you perhaps want to access equity and you don't want to do it with your with the bank where the home loan is, you can actually switch the bond over to us. Any additional equity you can apply for. So what we do is we take the outstanding balance, and then if you do qualify to access that equity, we extend the finance to you as well.
Thank you. Thank you.
Okay, thank you so much, Alet.
Sorry,
Okay,
Naledi, perhaps I can just help with the PIP property question.
Okay.
So at the moment, we do not have a lot of properties in possession. We've in fact only had about 7 as at 3 months ago, but that situation is changing just given the current economic climate. We market our properties in possession on the private property website. You will be able, if you access private property, you will see that there are specific tabs for bank-owned properties, and you will find all the properties that we are marketing on that particular website. Obviously, if you do not come right, I will also put my contact details on my slides that we'll share. You are always welcome to come through me. My legal team supports all the environments of home loans, so I can always channel you to the necessary areas. But private property is where you will find bank-owned properties. My sense is for most of the banks, but ours are definitely there.
Okay, so can we just start marketing them?
I suppose, yeah. So private property is your platform for sale, and obviously if you have a customer that is interested in that property, then you would come through to the bank with an offer. So you would put an offer in. Yeah.
Okay.
If you have interested purchasers, you would then deal with our property in possession department. And I think, Portia, we could potentially put something together. We will discuss it with our collections colleagues to put a presentation together so that you know who to contact if it's a property in possession, if it's a help you sell, so that you have direct lines into these various areas to support you with your customers. Yeah.
Okay. Thank you, Anita. Let's go to Bothwell. Please unmute yourself. Bothwell is the last hand. Please unmute.
Hi. Sorry, my questions were all asked. So
Okay,
that's
so you're
fine.
sorted. Okay.
Yeah, I just heard they talk about, I think it's RFP to be saved on the database. I just asked them for any, to save me on that database. But as I understood, you're going to have everybody that participate put on the database. So it's wonderful. Thank you very much again.
Okay.
Yeah, so perhaps just for clarity, we will give contact details for company profiles to be submitted. If we receive a profile, that profile will go onto the database.
Okay. No, thank you so much. I think, let me see on the question, Mishka, I was informed by one of the franchise holders' principals on Friday that they received an address and the details of the people who enters the Help You Sell program as they are on the panel for many. I think it's the same issue of wanting to be on the panel. Yeah,
Yes.
the most questions, yeah, are linked. Okay, let's see if there's another one. So colleagues, that communication we're going to share, we see your emails, the information will be shared. So also when I get questions, Ms. Marais, Ms. Letlape, Mr. Jacobs, I will share with you on email.
Hello, Portia.
Okay, I see there's a hand. Just wait, sir. Let's see who's
Hold on
this.
for me. Yes, Portia.
Okay. Okay, you can ask, sir. There's a Lindu. Lindu, please unmute. Lindu, please unmute. You're not winning. Please put your question on the chat. We will deal with it after the webinar. Okay.
Can you hear me now?
Yes, yes.
Okay. Good day, Portia and your leaders there. Mine was not a necessary question. Just want a clarity. Our trust account, it was opened through via our service provider, PayPro, but we're managing it with them. Do we have any? Do we get any intensive in that with ABSA, or it's only them that get any something from opening and running that trust account? Thank you.
I think that's for.
Yeah, maybe I think he's talking, for example, of payment processing, you know, PayProp. Some of the property practitioners, they have their trust accounts under with PayProp. So I think his question is asking incentives. I'm not sure which incentives does ABSA offer if you have a trust account. So he's asking only the supplier that he's under get those incentives, or even them, do they get from ABSA? Is it familiar?
I'm not sure. Is it Tanya?
Yeah,
Is that
yeah. I'm happy to take it, and perhaps we need to take it away.
Okay.
With the ABSA third-party fund management system, it is actually a software system that allows you to manage your trust account yourself. So you would not need to use a third-party supplier to manage it for you. It is software that we install in your offices and you manage it yourself. The benefits that we have for that is that we are able to waive the admin fees for taking up the software and for installing it and effecting all the training in your offices. We are also able to waive on request the monthly admin fee or rental fee for that product. And so the only cost that you will pay is the transaction per transaction cost against that trust account. And remember, the trust account charges, while they are charged to your business account, there is an automatic pulling of funds to cover those costs from your interest earned on the trust account on a monthly basis. So they are automatically linked under our products. Your transaction fees debit to your business transactional account, and on each month end when they debit, the interest in your section 52(1) account, those costs are offset against that interest. So you don't actually pay them. It gets offset against the interest, and in your reporting to the PPRA, it will show this is the interest that's accrued in the account in any given month or period. These were the charges that were levied against transactions from that account, paid from the interest. So those are the benefits for us. The benefit is you get to manage your own trust account from the comfort of your offices. You do your own investments. You can do your own transacting. You do not need to use a third-party service provider to manage it for you.
Okay, thank you, ma'am, for that. Let's go to Nita. I have the last hand, Nita. Okay, she's struggling both well. You didn't finish the questions. Maybe you want to add. I see your hand again.
Yes, I did not.
Yes, please ask. Okay, I think maybe it's an error for him to raise the hand. I can't hear him. Portia?
Excuse me, sorry, I might have been just glitched here. Can you hear me now?
Your volume is low.
Somewhat.
Can you increase volume?
Hello, can you hear me now?
Okay, let's try. Please ask.
Yeah, but can you hear me clearly or?
We can hear you.
Can hear you.
Okay, so I didn't get to pose my question earlier. I want to find out when it comes to marketing a property on behalf of help to sell, is it only private property? Because I noticed there's also a website and it's got bank-owned properties or repossessed ones. Is it only private property, and how does an agent or agent sign or sign in on help you sell?
You are breaking. You are breaking. I don't know if colleagues can hear you. I'm struggling.
Yeah, so Naledi, I think I've heard the gist of it. You know, Portia and I don't operate in this environment directly. My understanding is on platforms, we only advertise on private property. Whether those listings are directly available from a bank, we will put all of that information into a document that we will share with Naledi on all our distressed sales colleagues, our help you sell, our properties in possession, our agent panels for both those areas, because we use panels of agents for properties in possession and help you sell. We will put all of that information plus contact details into one document that we'll give to Naledi to share with everybody that registered for this webinar.
Thank you very much. But may I ask one quick question lastly before I close the mic? Can an agent get pictures of their own for personal marketing maybe? Because some pictures, when it comes to bank owned, they will just be outside or the site or the area, but not detailed pictures like the info.
Yeah, I hear you. Please just be mindful, colleagues, when you are dealing with distressed properties. You are not always dealing with owners that want their property sold. So where there are no pictures of insides of houses, that is because we cannot get access. So we respect our customers' privacy. Even if we have bought that property in on an auction, we do not go into homes without permission to take photographs. So in adverts where you only see the outside, you can know that we were not able to gain access to the inside. We do need to be mindful of where our communities find themselves when they are distressed. I hope that answers your question.
Yeah, it does very much. But I'm asking, in the case where access is permitted, can an agent and third-party agent get pictures of their own and not from the bank? That's what I'm asking.
That will depend. That will depend on our collections colleagues' internal processes and procedures. We will add that to one as an item to be addressed.
Fantastic. Thank you so much. All right. Good day. Thank you.
All right. Thank you, sir. Portia? Not our Portia.
Oh,
Portia on the floor.
I keep getting confused.
There's a question from Portia. Please unmute.
Okay. Can you hear me?
Yes.
All right. So the lady just spoke about the trust account, that you don't need to go to the third part, because at the moment I'm speaking to this property management software company. They say they'll open a trust account for you. And the good thing about that is that you don't need to put together your audit, because auditors are very, very expensive. So we need to pay for that every year. And now the thing is, we are required to submit audit every year. And also there's something with PPRA where you need to, what is the word? Where you're exempted from submitting the audit. How does that work with having this with ABSA, a trust account personally with ABSA, and going through these third portal? Because they're also quite costly to pay them every month from your deals. I'm done.
Okay, thank you. Tanya?
Sorry, I'm happy to take that. Just sorry, oh, there we go. I have a dog standing in my room barking. Apologies from doing my webinar from my home today. So as far as audit costs are concerned, those charges will attract to the regulatory requirements under the Act. But what facilitates that audit, if you have our third-party fund management system, is that you can pull all your reporting directly off your system and give it to your auditor. So it facilitates their process, which should then alleviate their costs. It's the age-old adage of taking a middleman out of a transaction. You have the software. So if you use a third-party management company, they are running your trust account. So if an auditor is needing something, it goes from you to them or vice versa, or they appoint their auditors to do it. You can manage your own business and your own trust account and appoint your own auditors, where you are free to negotiate your own audit fees. I think what these software packages offer you is that autonomy to manage your accounts yourself and to negotiate with service providers on the requirements that you need to meet. You are then free to negotiate your fees. I think that's the best advice I can give you.
I guess the second part of my question then is for the PPRA, that there is a thing, I'm not sure the wording, if I have the wording correctly, that if you can be exempted from submitting audit yearly, something like that. So the thing is, these third-party property management companies say you can be, if you use their services, you are then exempted from that. So I'm saying, okay, I understand that with ABSA, I'll have this portal where I can pull off information or that. Can I then somehow be exempted from submitting an audit, or just submit that document that I pull from ABSA that this is how my accounts are running? Because I'm trying to see the benefit of both without also, yes, I think that's what my question is basically. I don't know if I'm clear, but I think I'm going somewhere.
Do you have a FFC as a principal?
Yes, I am a principal, yes.
Because remember, if you wanted to be exempted, you had to inform our audit department with an affidavit so they can exempt you from holding a trust account, whether if you are using a payment processing agent on that, then they will open a trust account on their side, not you managing it. They manage it for you.
Oh,
you see.
I get it.
But you have to, yes. So, but we'll need to look at your profile. We'll need to go into our system, because you were saying, PPRA was saying you don't need to hold a trust account. They are doing it for you. So we need to see, how did you get your FFC as a principal? Were you exempted? Because you would need to know that you were exempted, because you would have to apply for it. Yes.
No, I'm not exempted. I am asking in terms of, ABSA is saying you can have your own trust account with them and you can manage it with them, right? And then there is the third party property software companies that are saying, if we move away your trust and we'll open it for you and then you'll be exempted. That's what I'm talking about. So I guess maybe my question is not clear, or I'm not understanding what I'm really trying to ask, but my train of thought is along those lines, yes.
Yeah, I think Tanya also spoke about the software.
Yeah, perhaps I can just support from a legal perspective, just on legal principles to help you. I'm not familiar with the third-party companies that offer this service, but my sense is if you run a trust account that's linked to your Fidelity Fund certificate, you are accountable for that trust account to the regulatory authority. If there is a situation where a third party can manage that trust account on your behalf, my sense is, and Naledi, you will potentially have more information around this, that third party company then accepts the liability for the management of that trust account, which would then exempt you in your personal capacity from being accountable for the transacting that goes on in that account. And if I understand Naledi correctly, that is something you then declare to the regulatory authority when you apply for your Fidelity Fund certificate, because that is how it will then be issued. Either trust account being operated by a third-party management company that will be accountable for it. Alternatively, trust account opened using this software where you will then be accountable for the reporting. I think that's the distinction I'm hearing in your question. And Naledi, perhaps you can just correct me if I'm wrong.
No, I think also she wanted to know about the software you mentioned where a property practitioner can go into ABSA and they will be able to see, all the transaction within their trust account. I think there's a software.
Yes.
Remember we said we'll bring
Yes.
a demo
Yes.
to take them through where they will need to see step by step what goes on into the account. So I think, yeah, it will help Portia with the next webinar where we're going to do a demo with Werner. I think he will take you through that to show you how you can monitor.
All right, understood. Thank you so much.
Okay, thank you so much. Let me see if we still have hands. Portia has done Sipose too. And colleagues, maybe let me add the questions for trust account and audit. We're going to have a webinar first week of October. I'm going to bring the executive from our audit department here at PPRA. They will take you through the requirements and the guidelines of holding a trust account and submission. So I think if we join on that one, it will, link to this webinar and everything will come together information-wise. Let's go to Sipose to please unmute. I'll take the last two questions.
Sure. Thank you so much. I'm not quite sure if I'm deviating a little bit from what has been presented before, but I'm just curious from the distressed properties point of view. I see all of us are interested in getting into that space so that we can get those opportunities. But I want to know from the bank's point of view, are there no remedial processes where estate agencies can chip in and maybe perhaps try to avoid people losing their properties, instead come into play and try to negotiate with those people to say that this is where you are getting at, you are in areas, therefore we can sell your property before it even gets to be repossessed by the bank. I know that we do business, therefore we would like to do business by all means possible, but at the same time, from a human perspective, are there no programs with ABSA where those interested estate agencies who really want to help humanity assist them, as opposed to losing the properties, they can then chip in and try to avoid as far as possible to at least maybe sell those properties at their own true value, as opposed to be selling them at a lower value where we can come in and play. So that's my question. So basically I'm trying to say, what is our role as estate agents in the property space in partnership with the banks so that we can assist people from losing their properties?
Yep. So Portia, I'm happy to take this if you'd like me to.
Yeah, happy. I've also shared the Help You Sell link on the chat because I think it will link to this discussion. Yeah.
So as a bank, we have our Help You Sell program, which is exactly that, where we as banks assist distressed customers so that they do not lose their properties on forced sale auctions. I think you raise a very valuable issue around how can agents assist. I think for us as banks, there's just a bit of a fine line, between assisting customers and potentially preying on customers. So we're very careful of that. And we're also not at liberty to share our customers' information or distressed statuses with any third parties unless they are actually ABSA suppliers. Which is why we are going to share the information for you to submit company profiles to go into our database for our next, what we call RFP. That is a public selection process where we go through all the profiles, do the interviewing and reselect candidates for panels. Once you are part of that panel, for banks, that is where we then pull you in to assist our customers in our Help You Sell programs. But We will also, we are continually looking for ways to enhance support of distressed property customers. And this is something that Portia and I will take back to our teams to see if there are other mechanisms aside from Help You Sell that we can start designing that could include our property practitioner communities in assisting us supporting distressed clients. That is something we can look at. Hope that answers the question.
Yes, you have. Thank you so much, and I'd be very happy to be part of that initiative, the new initiative that would.
Okay, perfect. So please ensure that when you get the documentation that we will share with Naledi, that you submit your company profile so that our database is rich with colleagues moving into these environments for us to choose from.
Indeed. Thank you, ma'am.
Thank you.
Okay, thank you so much, Butch. Let's take last question.
Hi, hello.
Thank you, guys. Thank you,
I'm
guys.
sorry.
I trust you can hear
There's
me.
two people speaking. Is it Butch?
I'm Butch. Butch speaking
Yes,
here.
please ask.
Okay, thanks, ma'am. Yes, I'm back to the trust account and the three-party management account. And I'm hoping the Portia, not your Portia, the other Portia is still listening. So we have a product, the trust account, with a third-party management component to it. And I just wanted to remark that that third-party management is so efficient and so effective. It is so good at providing information about your tenants. For instance, if you need the interest earned on that person's investment, you don't have a problem with trying to find the interest from a whole bunch of persons sitting in an account. It is very easy. It is a compartment with that person's information in it. So when it comes to auditing, we found that because you can provide the auditor with effective, clear, concise information, it was actually very cost effective, the auditing component of it. So there is a choice. We know that we may well have decided to go for a third party to manage our trust account. Obviously, when we've applied for permission with the PPRA, but we've decided not to do that. And I can just tell everybody that's listening, if you manage it through the third party management system, it is so easy. It is so easy to do and so clear and so concise that the auditors finds it very, very easy. Finds it very, very easy to do your audit, and it becomes very cost effective. Thanks, ma'am. That's all I wanted to remark.
Okay, thank you so much, Butch, for that. I want to thank all our speakers today. I want to thank all the participants, the questions that came through. I think our takeaways today on the presentation from Ms. Marais is that we know now that you can open a business account and you can also manage a trust account, and there's a software that can help you in remote reporting and also, monitor the monies in the trust account. We spoke about the demo that we are going to bring to you as a webinar with Werner Jacobs. He also answered some questions in the beginning. I'm not sure if he's still in the meeting. Thank you for that. And, Tanya also touched on how ABSA can assist you if you want an FFC with the PPRA to confirm an account, and they will open it for you, hold it. And then once you are starting a business, then you are able to open it and run the business. And also she mentioned on how to close that account if you want to close it. And we also had a presentation that was very detailed and informative from Ms. Portia Letlape, where she recognizes the first home finance under DHS. We know it's a product under the minister. And she also has a product, that can assist first-time buyers, with up to 106% bond. And she mentioned the fixed rate, and she went into detail with that. So we are going to share the presentations after. I have your email addresses, and I'll see some of your email addresses on the chat. And, she also touched on buy-to-let for investors. And she went into the eco home loan, especially for those who are interested in going green. And I think also what was important, it was the insurance, that assist with the 12-month tenant rental cover. So I want to thank our speakers today. We do appreciate for that. And we saw the comments and the questions that we had. They're similar to a distress sale with ABSA, most or being on the panel. So we're going to share the communication that ABSA is going to make for us. I will email you so that you are also on the database and they help you sell information. This is not the last of the webinars, colleagues. We're going to have more of these sessions. I know that Tanya, you are in the space of conveyancing. So we need to come back and, engage on that so that we can share the information. Ms. Poshia, we're going to communicate more on some products that can help our property practitioners going forward. We not only do the webinars, we also do workshops. We go to provinces, and that information we will continue to share on our social media so that you can see when is our next sessions in the provinces near you, because in the webinar, at least we are able to cover, a lot of the people who are not in the provinces. The recording, colleagues, I saw your comments, I saw your charts that you need the recorder. It's going to be on our YouTube channel. By this evening, maybe can I promise, maybe after 6 p.m., I'm going to upload it after everyone leaves the meeting, and then we can share it. Can I also ask that you follow us on our social media? We did share our handles. These are the handles on the screens. Please follow us so that you don't miss communication on the next webinars we're going to make. We have a webinar next week that will focus on social housing, that will focus on how to lodge a complaint with the PPRA against property practitioner. It can either be for code of conduct, misconduct, misappropriation of funds, or illegal trading. And we're also going to have some webinars around audit, because I saw some of the questions that are being raised today. It was on issues of trust account. So I'm going to engage our department in the audit department so that they can come and engage us on that. And also, colleagues, let me add that we're going to talk more on first home finance. There's going to be too many topics. So what I'm doing as stakeholder for PPRA, I check what are the concerns on the ground, what can property practitioners benefit on, which topics can I bring for you on the workshops and the webinar, and I'll continue to do that, and so that we can be informed and we can have the knowledge, and it will also assist you in your businesses, as you are trading and as you are growing, as you try to now enter into these new categories that PPRA is trying to legislate, managing agents, developers, and auctioneers. So I want to thank you, colleagues. I know it's lunchtime. Please drive safe if you're driving. Please go have your lunch and come back after 6 p.m. to listen to the recorder. I'm going to share the slides. Ms. Tanya Marais, thank you so much for the presentation. Ms. Poshia Letlape, thank you so much for your time. We really, really appreciate these information sessions. We'll take them in bits and pieces, but we will eventually get there. Thank you so much. I don't know if you have maybe last comments before we close the webinar.
Yes, please. I wanted to take this opportunity to thank the PPRA for the invite, but also to thank the property practitioners. I think the industry wouldn't be an industry without you playing the role that you play, and you do most of the hard work. The hard work that you do in terms of selling these properties. We really, really appreciate you. I think beyond just, transactions, etc., we're doing what we need to do to help South Africans get, access to housing. So we appreciate you. Thank you.
Thank you. Ms. Marais?
Yeah. I don't think I could have ever said it better than that. Thanks, Porsche, and thank you to Naledi, yourself, your team, the Property Practitioners Regulatory Authority. It is great for us as financial institutions and as ABSA specifically to play a meaningful role in this industry and in housing the nation. You guys do an amazing job. It is a necessary functionality for our country and our individuals. And yes, we look forward to engaging further on other interesting topics. Thank you for being such a wonderful audience today and for engaging and all your questions. It makes it so much easier for us presenters, when we do have an engaging audience with lots of questions. So thank you so much. We appreciate you.
Thank you. So the questions, colleagues, that are on the chat, we're not ignoring them. I'm going to email them to our colleagues, and they will respond or also share information with their relevant departments within ABSA to assist. Thank you so much. Bye-bye.
Thank you, everyone.
Bye.
Thank you.